Now, what are the tax-free benefits? What do we mean by tax-free benefits? These are benefits which does not attract taxation. They are part of the allowance. Medical service provided to a full-time employee and whole-time service director holding less than 5% share, including their beneficiaries, spouse, and up to 4 children and below 21 years. So these are the benefits which can be tax-free benefits. Medical benefit provided to a non-whole-time service director, partner, and sole proprietor subject to a maximum value of 1 million. Education fee of employees dependent or relative if tax on the employer. Education fees paid by the education institution for low-income employees dependent attending the institution. So these are the tax-free. International passage cost for non-citizen employee recruited outside Kenya, tax-free benefits. Non-cash benefit not exceeding 36,000 per annum. Shillings 2,000 per day towards subsistence and traveling allowance for person working outside usual place of work. Meals provided at the employer's canteen where the value does not exceed 48,000 per annum per person or 2,000 per day per month. The first cash 150,000 per month of the total income and deduction of up to 50,000 per month for non-reimbursement hospital admission costs, drugs treatment and home care service for disabled persons registered with the National Council of Persons with Disability and approved by the Commission. The exemption is valid for 5 years. Deduction of 1/3 of employee income of non-citizen employee of non-resident company or partnership firm approved by Commissioner. So it must be approved by Commissioner of Revenue. Now we have deductible expenses. These are expenses that reduces the taxable income of a person in any year of income. Such expenses includes mortgage interest paid on loan borrowed either for purchase or improvement or for residents indeductible subject to maximum amount of 150,000 per annum, not claimed for more than one resident. Life, health, education insurance relief is deductible at 15% per of the premium subject to a maximum of 60,000 per annum. Deductible contribution to registered pension firm in respect of employee is the lower of 30% of pensionable income, actual contribution, or maximum amount of 240,000 per annum set by Commissioner. However, the first 3,000 per annum of total pension or retirement annuities received by the resident taxpayer are exempted from tax. Lump sum payment and monthly pension payment to person of 65 years of age and above are tax exempt. So there are these items which are tax exempt on the basis of the age of the taxpayer. So 65 and above, you are exempted tax. Tax exempt lump sum withdrawal. Lump sum commute from registered pension firm. The first cash 600,000 will be exempted. Withdrawal from registered pension fund upon termination of employment shilling 60,000 for each year of pensioning service subject to a maximum of 600,000. Again, withdrawal from registered provident fund or divine contribution fund shilling 6,000 for each year of pensionable service subject to a maximum of 600 plus all lump sum from segregated fund on contribution made prior to 1st January 1991. So that is on the basis of withdrawal. A one-off final lump sum payment from registered fund to the estate of deceased, the first 1.4 million is exempted. The first cash 600,000 of NSSF benefits, again that is exempted. Withdrawal above this limit are subject to withholding tax based on length of service. Any surplus refund to withdrawal by employer from registered fund is taxable on the employer. So these are the deductibles on the basis of expenses. And then finally we have contribution to NSSF. The current rate is 10% of the monthly income up to a maximum of shillings 400 per month. I have paid by employer, I have paid by employee. Contribution to National Hospital Insurance Fund. The new rates of NHIF became effective on April 2025. It is a mandatory contribution among formal and informal sector workers as well as retirees. So we'll see actually the rate, the scale, how is it taking shape. So we'll see the NHIF current rate, and then when you are given a question on the basis of NHIF, you know how to apply the rates. So the NHIF new rates are intended to give members both inpatient and out-of-patient cover. Out-of-patient cover service include this new rate included: family planning, tracks and medicine, general consultation with general medical practitioners is actually included in deductible expenses, prescribed laboratory tests and lab investigation, treatment of sexually transmitted diseases, prescribed ultrasound diagnosis and x-rays, treatment, tracing and diagnostic testing, clinical counseling services, postnatal and antenatal health care, health and wellness education. So these are part of NHIF reduction. So these are the new rates. If you are paid between 0 to 5,999, you will be deducted 115. 6,000 to 7,999, 300 will be deducted. 8,000 to 11,999, the rate will be 400. 12,000 to 14,999, 500 will be deducted from your salary. 15,000 to 19,999, 600 will be deducted. 20,000 to 24,999, 750 will be deducted. 25,000 to 29,999, 850 will be deducted. 30,000 to 34,999, 900 will be deducted. 35,000 to 39,999, 950 will be deducted. If you're earning between 40,000 to 44,999, you will be deducted 1,000. If you're earning 45,000 to 49,999, you will be deducted 1,100. If you're earning 50,000 to 59,999, you will be deducted 1,200. If you are earning 60,000 to 69,999, you will be deducted 1,300. If your salary, gross salary is 70,000 and 79,999, your deduction will be 14,000, 1,400. If your salary is 80,000 to 89,999, you will be deducted 1,500. If you are earning 90,000 to 99,999, you will be deducted 1,600. If your earning is 10,000 and above, 100,000 and above, your NHIF tax rate will be 1,700. Self-employed or special individual are now taxed 500. So the NHIF you're paying is for your benefit, and there are benefits that you get when you provide NHIF. Now we want to look at the married woman. How do we treat a married woman as far as taxation is concerned? According to Section 45 of Income Tax, the income of a married woman living with husband shall be deemed to be the income of the husband for the purpose of ascertaining his total income, and it shall be assessed on add the tax thereon charged on the husband. So if you are a married woman, your income will be part of your husband's income. A married woman is treated to be living with her husband unless they have been separated under the court order or under the written agreement of separation. 2. They have been separated in such a circumstances that separation is likely to be permanent. 3. She is a resident person and her husband is non-resident. Currently, there are 3 exemptions to the rule as follows: the wife's employment income, the wife's professional income, and the wife's self-employment income. So anything that the wife is earning from professional, wife employment income, wife self-employment income will be not part of the husband's income. Wife employment income. Wife employment income will be taxed on this separately. However, wife employment income will not include the following income: her income as an employee of the husband, her income as an employee of partnership in which the husband is a partner, a company in which the share capital is held by herself or the husband, or to the extent of 12.5% or more, where directly or indirectly. Income derived by her as trustee or as a manager of trust which has been created by husband for benefit of children.